one of the best performing return generators. So we thought of talking to Nilesh Doshi, the founder members of Green Lantern PMS, to talk about what are they doing so differently, and in an otherwise very difficult market, a flat market, what's their alpha creation strategy. Nilesh, good afternoon, and thank you very much for joining us. Can you share with our viewers once, for the calendar 2022, what kind of returns did you generate in your main scheme or strategy versus, say, 2021?
Yeah, so thank you, Ajay, and thank you for having me on the show. Uh, yes, as you rightly said, 2022 has been very challenging as far as the markets are concerned. Global headwinds, volatility, liquidity tightening, so many things. What actually worked for us, Ajay, is a couple of things. One is apart from fundamental analysis, what we do in detail, we are also trying to keep ourselves updated with a lot of macro challenges. And we try to ensure that our investment hypothesis is not against macro headwinds also. So, in short, what we have attempted is that we have a very disciplined approach. We never went for over or a concentrated investment into any sector or stock. And also, we have tried to analyze wherever we feel that there are massive macro headwinds or challenges appearing. We have also exited those sectors or stocks. For example, like IT or pharma, we exited in December 2020, early 2021, seeing the challenges in terms of inflation coming in, expecting the interest rate to go up. And we could sense that this could slow down the global world. At the same time, we invest into capital goods, which were very positive for almost more than 2 years. We invested into PSU banks. We also invested into a couple of very niche businesses. And all that actually has worked very well for us.
Right. Talk to us about your portfolio selection criteria. How do you really pick stocks? Because that is something which is differentiating your kind of strategy versus many others.
Yeah, so very interesting question, Ajay. Yes, as I said, we try and analyze what are the macro challenges and what are the macro supportive to the sectors which is coming in. B, we also try and analyze where the earnings are going to come in, and that's very critical. Typically, market throws a lot of opportunities with the belief that this particular stock or a sector may not have earnings coming in, and that is where we try and analyze the reasons why those companies have poor earnings and what could be the reason these companies could have a change in or an increase in earnings. And that actually has very well worked for us. Apart from that, yes, we try and ensure that our margin of safety at the entry point is equally good so that your risk reward is very favorable. And that is why, as to say in my earlier answer, is that, for example, we were very positive on capital goods almost 2 years ago. We did a couple of tactical plays last year in metals, uh, and and we exited those sectors also because the moment we realized that the earnings are going to, or whatever hypothesis on which we have been investing is going to get challenged, we do exit those stocks. So overall, we did very well by exiting support couple of sectors and by investing those into couple of capital good companies, infrastructure companies, PSU banks, some uh, integrated textile companies, energy related capex companies. Some of these things have worked very well for us.
Let's talk about some of the stocks which you hold in your position, in your key strategy, and also are bullish on, as in not the stock call but the theme, pipe companies. We've seen pipe companies make a lot of value right from Maharashtra Seamless, JTL Industries, APL Apollo, Tata Metallics, so many of them actually. What makes, and I see one of those names also in your portfolio, why do you like metal pipe companies and the one which you have in your portfolio? What's the basic trigger behind, is it oil and gas, is it water, what exactly is the trigger?
Yeah, interesting. So if you look at, let's say you name one of the pipe companies, uh, the reason for investing into this business is that for last 10, 12 years, in a very benign inflation and very low interest rate cycle, there has and a lot of focus on ESG renewables. There hasn't been any capex done in oil and gas sector. Almost you can say that the entire sector was deprived of liquidity and capital, and a lot of anti belief system that this sector will be dead. The terminal value is zero. And when you realize post COVID that couple of refineries have closed down, the industry has not done any capital expenditure, any exploration for last almost 10, 12 years. So we believe that as the world economy normalizes post COVID, the demand for oil and gas, especially from the developing world like India, is going to go up substantially. And the world will be forced to do some capex coming into starting from exploration. Even some refineries were closed down, so we believe new refineries will have to come. And apart from that, Ajay, we also see that some deglobalization, or you call it a reindustrialization, will happen going forward, either from a geopolitical reason or any other reason. And all this, we believe, will definitely lead to the capital expenditure coming into this sector. Along with that, we have PLI capital expenditure coming in. So when you see some of these businesses, will definitely see a very good demand coming forward. Of course, in the near term, short term, since the crude oil has cooled off from the high, there could be some minor headwinds, but on a longer term, we strongly believe that the capex will come back.
What about some of the auto ancillary space, particularly battery companies, Amara Raja, Excite? This pocket has not performed for a very long time. And now the view is that, the fears of EV and the ICE engine battery requirement will be less, demand will be less. All of that is getting reversed. People understand that ICE engine is not going away in a hurry. Plus, these battery companies on their own are upping their EV related game. How do you see this pocket? And you have some names there as well.
Yeah, so Ajay, here you need to look the both the thing in a little different way. Yes, these companies have not done also because of the belief of investors that lead acid battery will die, and the terminal value of this business is zero because world over it will be only electric vehicles, and electric vehicles require very less amount of lead acid battery, and larger is the lithium ion batteries or maybe some new technology. Having said this and analyzing this, we realize that even if, let's say, we keep it into two parts, if both ICE engine and EV will survive, then definitely this business of Amara Raja or Excite or any of these lead acid battery companies will survive. And they are a phenomenal cash throwing companies, really, except for some volatility in raw material in the past couple of quarters. These are a real great cash flow throwing businesses. Second, let's assume that the world will shift to electric vehicle. In that case, definitely the country like India will have require its own battery manufacturing companies. And then who else can do it? Yes, you can have some MNC coming in and starting a greenfield project. But as of today, no MNCs have ever come in. And if anybody wants to come and start the industry, it's going to take 7, 8 years. So when you look at that angle, then both these companies are already ahead of curve as far as the domestic battery or electric vehicle batteries are required. So one of them is already done a forward integration first, that is battery pack, which is the most critical component of any electric vehicle. And now the company is going backward into making lithium ion cells. So in either of the scenario, if this company is going to perform the best in the country, and if any MNC electric vehicle companies who is going to come to India with their capex plan, making the cars or the vehicles, I think the easiest thing for them to go to the company who's already manufacturing these products in India. And seeing this, we feel that the company is available at 8, 10 times forward, and throwing a cash flow of 1,000, 1,200 crores every year, 4, 5,000 crore of investment lying in the books. So balance sheet is fantastic. So we feel that at some point of time, market will recognize it. And that's where we believe that the opportunity is good. On the downside, Ajay, there is hardly any downside as the company is quoting at 8, 10 times forward.
One more call. One of the large PSU banks also is there in your portfolio. When we look at SBI commentary coming in, BOB, Union Bank, the big ones, one gets a sense that the runway of growth may very well continue because the cycle is just starting off. You still own some of the large PSU banks? You'll continue to hold them for the medium term at least?
Yeah, we still hold it, and we believe that the long term, very few headwinds in the near term because of the global slowdown. We feel that the India story and the India growth story is intact, and these companies will definitely do very well. So we have this position, and this position is not today. We have been holding it for last couple of years.
All right, Nilesh bhai, thank you very much for your time and good luck, even for 23 also. Your investors will
so
make
much,
very good returns, I'm sure, confident of that. Thank you very much for your time.